My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I've been my friends. I'm just trying to help you make some money. My job's not just entertainment, to educate, teach. Call me, 1-800-743-CBC. Tweet me, @Jim Cramer. This market is not experiencing a small cap rally. It's experiencing a rally in everything else but the tech titans. The mega caps have become what we call shared donors for virtually every other stock in the market. It's not a rotation at all. It's the great broadening, and we have to embrace it as bullish, not bearish. Except for the big cap tech stat report this week, which are stalling out daily and seem to just run into selling every day at the close. So on a day when the Dow ended down 49 points, just gained 0.08%, and the Nasdaq rose 0.07%, I say we celebrate the market's good breath. I want to put some examples in your face so you know we aren't being led solely by a bunch of small cap companies that aren't and are doing well. See, many of the small cap companies are really bad stocks and bad companies. And their stocks are only being bought as part of a larger basket, like the Russell 2000, the S&P Small Cap 600, or even the S&P Mid Cap 400, which I know sounds like our NASCAR race. But it represents the most undervalued part of the economy. The big institutions don't have the time to examine all these different smaller cap stocks. They just treat the Russell 2000 like they do the S&P 500. And they buy the index itself as an entity because it is still historically cheap, even after this rally. That's the broadening. Okay, so the broadening is some real trash as well as some treasure. The treasure being companies that do better when interest rates go down, like when the Fed starts cutting. The tech titans, so rich, don't need the public debt markets to prosper, so they don't get much benefit from lower rates. That's not the case with the small caps. So you can see why people would sell the tech titans that are already up huge for the year and cycle into the cheaper small cap stocks as a group, even if many of them are just plain awful. When you buy an index, you always got to take the good and the bad. But you know what? It's not just the Russell 2000, of which, by the way, I'm tired of hearing about. So I say this. Let's look at some individual stocks that have tacked on billions of dollars in market capitalization as part of the great broadening that is, alas, much more permissive than anything we've seen in ages. So you know that this is not just some sort of small cap romp, even though that's what you keep hearing every day. It's wrong. Take McDonald's. Now, this stock has gotten no love. It's seen as a loser because its meals cost too much. The golden arches has fallen from 302 to 243 at its lows in a few weeks. It's a total. So this morning when McDonald's, a $188 billion company, not small cap, reported disappointing same-store sales, down 1 instead of up 0.84%. Substantial sales miss, 10-cent earnings miss off a 307 basis. I saw the numbers. I said to everybody in the room, all right, this one's going to soar. I mean, everyone looked at me like, well, what is he talking about? But sure enough, McDonald's jumped nearly 4% today. So there's no doubt that when Wall Street was still in love with the Magnificent Seven, a stock like McDonald's would have been pelted into submission after reporting such dismal numbers. But the market's fallen out of love with the Seven. And frankly, nobody was truly disappointed by McDonald's because everyone expected them to have bad numbers. I mean, give me a break. The fact that McDonald's articulated a plan to return to growth, including $5 value meals, was enough to get everyone excited about this one. Hey, you know what? We saw the same thing on Friday with the $69 billion 3M and the $99 billion Bristol Myers reported on Friday. Both had a ton of good things to say. Now, Bill Brown, the new CEO of 3M, spent most of his conference call actually talking about how he sees many areas where costs could be cut. He saw multiple segments that could grow faster. That's all it took for the stock to rally 23%. What you'd expect if 3M had gotten a takeover bid. I say that's just playing catch-up as part of the great broadening, although Bill is an inspiring fella. Bristol Myers did raise the range of its full-year earnings forecast pretty substantially, which is a huge positive. Company also earned $2.07 per share. Street was only looking for $1.62. Everyone had given up on this one. That plus some news on a hopeful slew of new drugs got the stock rallying more than 11%. That's the most in 20 years. A broadening needs Bristol Myers. They can't just rely endlessly on Eli Lilly. What happened at Bristol is that after years of repeatedly missing the estimates, a new CEO came in, and now they're knocking it out of the park, not unlike 3M with the new CEO. Of course, it's not just these big caps. We're seeing a remarkable run in the heretofore disliked smaller semiconductor stocks. If you take one look at the SMH, Semiconductor Index, you'll see a wholesale redistribution from the once-loved NVIDIA to everything else. Take this morning. Friday morning, one semiconductor reported, and we've gotten used to it missing the numbers. It's kind of like an old shoe missing numbers at this point, but not this time. It beat the estimates. earning 96 cents versus 92. Wow. And it rallied over 11%. CEO Hossein El-Khoury had a lot of good things to say. I'm going to quote him. We are seeing some stabilization in demand in our core markets, he told us. He went on, we expect parts of industrial, such as energy infrastructure, to recover in the second half. Not only that, he says that China's recovering in both industrial and auto. Boy, they got some big orders from VW brands, too. NVIDIA may be the stock that keeps on giving market cap as former President Trump keeps antagonizing Taiwan and demanding the geopolitical equivalent of protection money. All of NVIDIA's chips are made in Taiwan, for heaven's sake. This stock's just not been able to rally ever since former President Trump made that statement. Out of Taiwan into America, sure. Makes sense as more, as long as it's more bite-sized, like an ON, or Skyworks, a Corvo. Sure, the Russell 2000 is talked about endlessly. But have you seen the S&P Mid-Cap 400 since the month began? Vroom, vroom. That's me making an auto sound. Super funny. Laughing on the inside. What's leading the charge? 3 of the top 10 stocks are banks. Wow. Hey, they've all experienced rallies of tremendous proportions. Like, take First Financial Bank shares of Abilene, Texas. That's number 1. On July 10th, the stock was at 29. Now it's at 38. Nothing happened. How about number 2? You may not know South State down in Columbia, South Carolina, but this quiet regional powerhouse has seen its stock go from 75 to 98. Third, Tacoma's own Columbia Banking System. The system stock was at 19 back on July 10th. Now it's at 26. Every one of these moves are what you'd expect from a takeover bid if you didn't know better. Here's something that makes sense. There are 3 home builders on the top 10 list. KB Home, Toll Brothers, Taylor Morrison. When interest rates go down, these stocks soar, even if there are no near-term number surprises. Number 8, one of my faves, Fortune Brands Innovations, a fabulous company that we've had on, which makes all sorts of high-end fixtures for housing, and it puts up great numbers on Friday. That's exactly what should happen right now in the business cycle. It's fitting. It's fitting. They're all mortgage or home equity plays. Of course, that's kind of the issue with the move. It's so fitting that it's almost by rote. We now love those new unheralded stocks. We hate the old tried and true fabulous companies. Money's coming out of what has been running for a long time and going into cheap stocks of companies that benefit from lower rates. Does Microsoft, which reports tomorrow, really gain or lose from rates? Not at all. It doesn't need to borrow any money. How about Meta, which reports on Wednesday? Immune from rates. And then Thursday, the day of days, Apple and Amazon have nothing much to do with rates at all, even as both their products have cost consumers a lot of money. Maybe these stocks can advance, but the bar is set so high it will be hard for them to excite or enthuse when we are at the beginning of a rate cut cycle. So the bottom line, I guess you're supposed to sell companies that have nothing to do with rates and buy stocks that can benefit from lower rates. That's the great broadening trade, people. And when you put it in that proper context, you know it's got some staying power, at least until the small, medium-sized catch up to the Magnificent Seven. Although if that's what's needed, an awful lot of points will have to be transferred from the 7 to the small fry to complete this rotation. I want to start with Dave in California. Dave.
Booyah, Jim.
Booyah, Dave. What's going on?
Well, I've been a club member for almost a year now, and I've been learning a lot.
Thank you.
And in light of your terrific interview with the Commerce Secretary last week and their future technology plans, she mentioned Texas Instruments. And is this that they had a good relationship with Texas Instruments? And is this a good time to restart a position?
Yes, it is, and I'll tell you why. Just like On Semi reported good numbers and Texan did report good numbers, you have an activist in there, Elliott Partners, that can make a lot of things happen. By the way, they're in Starbucks, and I think they can make a lot of things happen there. And in Southwest, Texas Instruments is a great story company, 2.5% yield, and I think they're going to have a very big meeting that's going to tell you, lay out the strategy, and the stock's going to go up well in advance of that. I want to go to Robert in New York. Robert!
Jimbo, I miss talking to you. It's been about 2 weeks, and I got to tell you, Jim, you're amazing. Tomorrow's my birthday, and last time I sang happy birthday to you, if you remember.
I enjoyed that.
Yeah, I know you did. It was pretty cool.
Hey, I mean, if you like your reviews yourself, absolutely. So
Jim, I gotta tell you, it's been 1 year that I've been speaking to you, and it's been a thrill of a lifetime to call into your show because you have made me so much money. In the 1 year is my birthday.
Well, there you go. Happy birthday. And I love that. See, I love that.
No, happy birthday to me. Happy birthday to me. Thank God for Jim Cramer. He's made me tons of money.
Well, don't quit your day job, partner. But I like that. Anyway. I like that. I like the whole theme. I like the theme of it. And I'm going to run down to play that in a continuous loop to my wife, Lisa, until she starts realizing that I'm a good guy.
Well, Jim, you're not a good guy. You're a great guy. But let's get on with it.
Just a second. Let me get on the phone. No,
You
no,
want to?
that's wrong.
You're
No, that was a
afraid-
mistake.
Jim,
That was a mistake.
you're
I made a mistake.
kind-hearted
I
guy.
violated all of TV rules just then, and you won't see me for the next 40 years. Tell me what's going on.
Jim, I love you, Jim. This stock has really done well in the last number of months, driven by the company's strategic initiatives and market conditions, especially in its investment banking sector. Their wealth management sector has been increasing also. I would think that if the Fed cuts rates, this stock will go much higher. Morgan Stanley.
I agree with you. I agree with you on everything on that call, frankly. I mean, let me tell you, Morgan Stanley, when we do pieces about these big IPOs and we get a lot of takeovers, you're going to see Morgan Stanley go higher and higher and higher. And I want to thank Robert in New York and Dave in California. They bring it. They bring it every time they call. Club member. This is the great broadening trade, people. It's not big cap into small cap. Get that out of your head. Look, this is when you sell, you donate great points from the big guys to the little guys. And you know what? I think you're going to have something with great staying power because of that. On Mad Money tonight, potato company Lamb Weston has been getting fried. So is there any hope for the stock becoming a hot potato? I'm running through the latest. Then last week we got the largest IPO of the year, Lineage, and the market seemed to like it, but where do I come down? I'm going to give you my thesis on the newly minted stock. And Columbia Sports was just about flat in last year, so what is going to take for the outdoor apparel company to finally break out? I'm seeing where things stand with the CEO, so stay with Cramer!
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.